neighboring family landscapes their front yard, you benefit from this visual aesthetic improvement. There's also potential financial benefit as that landscaping enhances the appeal of your neighborhood and your home to those looking to move. Unfortunately, the opposite also occurs. Every day we can experience negative effect from others' decisions and actions. A neighboring family that does not take care of their front lawn causes a visual blemish to the neighborhood. The blemish is not always just visual, it can be financial as well. Selling your home can be more difficult as prospective buyers gaze at the mess next door. So in this module, we examine these positive and negative experiences called externalities to understand their economic impact to society and the environment. You will learn that government plays a vital role in managing these externalities. Learning objectives. By the end of this module, you should be able to explain what externalities are, summarize what negative externalities are, explain what positive externalities are, describe what can the government do to correct for positive externalities, explain if there are non-governmental solutions to externalities. So I recommend watching these videos on negative and positive externalities, do the material, follow the course calendar, do the practice questions in the textbook. Externalities. So when the effect is positive, third parties are referred to as positive externalities, and when the effect is negative, the third parties are called negative externalities. So the result of an externality is a benefit or cost. So for instance, if you pay $3 for an ice cream cone and then consume it, you paid for it and received $3 of benefit. If you pay $5,000 to landscape your front yard, you receive the benefit equivalent to $5,000. However, your neighbors benefit as well. The $5,000 cost is not equal to the full value of the total benefit being received by you and your neighbors. So governments like to promote externalities, so they subsidize externalities. They spend to provide for positive externalities, and then they tax to stop negative externalities. For example, they have excise taxes they put on gas because gas is bad for the environment. So they put excise taxes on gas in order to reduce consumption and also earn money for the government to reduce consumption. The tax is used for. So positive externality is when you buy something or pay for something and someone else benefits when they don't pay for it. And then negative externality is when there's a tax put on something to stop it or reduce it. So I recommend to do the review exercises at the end of chapter 12, check your answers against solutions at the back of the textbook, and work for the mind activities. So yeah, positive externalities you want to promote, you want to subsidize them, spend on them so they happen more because they benefit society. So examples are national defense, roads, parks, schools. They all provide positive externalities to society over and above the cost. And we want to tax negative externalities that are causing problems in society. So we want to tax things like gasoline that will cause environmental damage. And there's also another benefit to that is that the government earns income through taxation there.